off to it. I know because of the gaps situation, but you know, it's like the article we discussed yesterday, John Authers and others. When you start looking at valuations with negative interest rates and then these coupons, it really flops around a lot, and don't be bothered by it. You just have to deal with it.
Okay.
It's just one of the outcomes of the negative interest rates, because some of these coupons are issued with a negative interest rate, so it really throws things into a little bit of a lather with that in seeking the valuations.
Yeah, I mean, I was just looking at the Swiss, and you know, the Marches are almost 200 points up under the Ds, and you get the same thing with the OATs, which, you know, I don't quite get. Well, the OATs are 500. What are the OATs? The OATs are almost
200.
Oh yeah.
And I just checked that.
Yeah. So, and then the Bonos were what you kind of expect, and the Italians, you know, are a couple hundred points. So.
And the Swiss are, you know, again, I'd have to know exactly what the coupon is on the next, you know, one. And it's, you know, it used to be so easy because in the U.S. Treasury market, you know, the coupon, it would be a 6% coupon.
Right.
And so if interest rates were 7%, it was easy to do the math. Now with the negative interest rates, it's much more topsy-turvy, so to speak. We've never been here before. So, well, you got nothing to fall on. But I would say, you know, that's what I should learn more about them. But, you know, it's not like they make it so friggin' easy to find the cash bonds here. You know, so all I'm left with is trying to, you know, discern the futures. Are you okay? I know you were in Denver.
Yeah, you know, I gotta go back in a couple of weeks. It's, you know, the whole thing's no fun, but you know, I gotta keep doing it.
And those ETFs, that you sent me, the Spain and French, those are not bond ETFs. Those are just merely stock ETFs.
Yeah, so, I mean, and I wouldn't touch them. Here's Spain, right up at the 200 day. I don't know even how anybody even trades that.
Yeah. Well, yeah. Go try to trade the Bonos. The market in the Bonos is not an easy. Not an easy situation to deal with. The spread is wide. It makes the Italians look, you know, like the Bund, because the spreads are quite wide.
Yeah. So I've just been kind of looking at them for, you know, just some color against the indices, but because I don't trade them. I mean, there's no way. I got enough problem doing what, you know, staying with the
I trust me, I know. I know all about it. Yesterday we covered a lot of ground. Which oats? The grains or the French?
No. The French 10-year. Ira, would you have thought that the oats might have sold off a little bit more, given that the French economy is able to comp, you know, the prior year and year before's comps, or are we coming off such a low bottom that nobody gives a shit?
It's tied into, you know, they build these baskets, and we don't know exactly what's going on, but there's no question that foreign buyers of European debt create these baskets. I guarantee you the Japanese authorities who are busy, you know, who run the sovereign bond purchases for the state pension fund and other buyers, the Chinese, they build these baskets. So it's basically like building subprime debt. You take X amount of this, you take X amount of that, you take X amount of that, and they're actually will get a positive yield based on, you know, the percentages. And so they're locked in here. You can go look at a chart. Look at the yield differential between the German and French bond. You know, there's absolutely people who are doing this, and the insurance companies and the European pension funds. Anybody who needs European debt for their portfolio does it because it's all in euros. So why should you do anything but that? You know what I mean? So
makes sense.
you can just work this out and find a much safer way to do this. You can see they're doing, and then you throw in the $20 billion a month that the ECB is buying, or that they proclaim that they're buying. We don't even know anymore. They're allowed to buy $20 billion, but it's like the Japanese. The Japanese don't buy all the JGBs that they could do under their QQE program because they're busy buying REITs and ETFs in the equity markets. You know, so they spread that money around. Europe doesn't do that yet, but they do. You know, they do buy corporate bonds. We know that because they've lost some money on some corporate debt. So don't be bent out of shape by it, because this is the arbitrage that goes on all day long. Trust me, this is all day. And if you have access to the cash bonds, then you're way ahead of everybody. We're trading the futures, and the futures are definitely the tail and not the dog. And sometimes they wag the dog, but without the transparency of what's really going on in the cash bond market, it's not an easy trade. That's why everything I do is reactive rather than proactive.
Gotcha. Now you mentioned Japan. I read recently, you probably know this, that the BOJ now owns as much as 70% of Japanese ETFs, and they own, they're a top 10% holder of Nikkei stocks.
Yeah.
I mean, like, where do you think that goes?
I don't know.
Well, I mean, if you follow it through, you could, well, look at where the Nikkei is. So it holds up, and they tell you they come in. If you want to talk about what's the conspiracies, what do they call it? The theory about the U.S. When the Fed supposedly, or some what's that group? The group that they label the plunge protection team.
What?
Oh,
the plunge protection team.
PPT.
Well, that's a different thing. The plunge protection team, which has been around in theoretical nature since Reagan, I guess. The Japanese, there's no theory about it. They tell you they don't buy when the market's up. They only buy when the market's down. But as you continue to hold more of it, and it goes unhedged, don't forget they don't hedge anything. It's the same with the European Central Bank. It's the same with the Fed. Why? What is a big missing component from the daily action of the bond market in the U.S. is the Fed doesn't hedge its portfolio. When you have a printing press, you don't have to hedge your portfolio. And that's why the convexity trades and others have been thrown into so much disarray, because the Fed is an atypical actor in the market. Where if I was, Goldman Sachs, and I was carrying a $500 billion portfolio for clients of different sorts, that might be hedged and rehedged and unhedged on a regular going basis, depending upon what our market outlook was. The Fed does no such thing.
Yeah, no, you're right. The institutional holder, the mechanism is where they would short some bonds as the hedge, especially some of the bigger mortgage banks and whatnot. They would hedge by shorting, which would cause rates to go up a little bit, which is the natural mechanism for keeping things in balance, right?
Exactly. And that's not, the central banks don't need to do that. Because
no, they don't. They don't.
Unlike you and me, if they have losing trades, a little more, another couple barrels of ink, please.
Yeah. Ira, I was thinking about what the Bank of Japan is doing with respect to Nikkei stocks and also ETFs.
Well, let me step back here, because ultimately, if you follow it through, you would have a socialist system, because if the government owned all the stocks, they would own all the businesses. You're basically nationalized your entire equity market.
Yeah. No, exactly. But what I was going to say was, I thought about it in terms of the Swiss National Bank. And then I realized, well, wait, the Swiss National Bank isn't buying just Swiss stock exchange companies. They're buying a global portfolio of stocks, whereas the Bank of Japan seems like they're focused almost exclusively on Japanese names, right?
They are. They are.
So you know, I was like, okay, so the Swiss National Bank has a better exit strategy than the knuckleheads at the Bank of Japan.
It's what all of a sudden woke me up, and I said, wait a minute. The bank with the best exit strategy and the only exit strategy is the SNB. And unlike a lot of these other banks, European Central Bank, basically everything the Swiss National Bank buys is a winner. So they've got huge gains. I go, wait. Now, they're in a situation where, again, they've trapped themselves because really, how do they get out? But they can get out.
Well, Ira, let me ask you this. Okay, I was thinking about this the other day. Now, so for SEC rules, like a hedge fund can only sell X amount of their portfolio. The Swiss don't have any constraints, do they?
No. They
can pull a trigger on whatever size block they want whenever they want.
They absolutely can. As many Swiss francs as they can put together to, you know, it's really as much as the world is willing to take, and that's the amazing thing. Think about that. How much the world takes.
Well, you know, because you know a hedge fund can only what? They can only sell or buy so much or a percentage of their book every day, right? Until they balance themselves out.
Well, once they get to a certain level, they have to declare. You know, like if you break the threshold, I believe 10%.
Right.
Now you become. I forget what the SEC name for it is, but then you have to declare. That's why you'll see Buffett or Icon, or when they'll stay below that level because they don't want to have to. Write to the SEC and say, because then it may look like they put a stock in play, and it may not really be in play. They're just accumulating it because they like the company.
Well, that's why I'm asking the question. It's just like, so if they want to exit, are they going to have to declare to exit, or they can sell as much as they want through different entities, or what do you think? How do you think that plays out?
Who, the SNB?
Yeah.
Yeah, you know what, Judd? I don't know the definitive answer, but they've accumulated an awful lot of stock, and I don't think that I'm sure they keep themselves under that threshold just because they don't want the legal challenge. It wouldn't be in their interest, So could they buy more than 10% of Apple? Yeah, sure they could, but it wouldn't be in their interest because it would call on a global basis into question everything that they're doing in a very open way, even though we can discuss it here, but we're an anomaly in discussing this.
Okay.
So, I mean, these are really good questions, which is why there was a guy in the FT today who was a Yale law student who wrote about the dollar. I actually wrote a response to him. So if you read his article, what's it called? You'll tell it's me. Why the dollar doomsayers have it wrong. So it's in the FT today. But there are a lot. See, again, we are in territory, unexplored territory. We've never been here before, and that's what I'm telling you. If I was in graduate school right now working on my doctorate in political economy or in economics, the Swiss National Bank would be my. It's a dissertation waiting to happen. So. If some of these students would get off their asses, it's truly waiting to happen.
All right. So the only other thing I wanted to bring your attention, because I know that, and I've had it up here, is the Nikkei annual chart. So
okay. Good one.
So in 2017, we went up to the half of all time and rejected. Then last year, we went up above it and couldn't stay above it. Now we're going back above that fib again. And if it can stay up here, it should at least show you 25,000 and change.
Well, you know what? It's a good point, and you know, of course, it gets tied up with the Chinese tariffs as everything else does. But now, who is that? Matt, who asked that question about the Bank of Japan?
No, it was Angelo.
No, that was Angelo.
Oh, yeah,
I'm at
sorry,
the gym.
Angelo.
I'm at the gym, Ira. I'm muted out listening.
Okay,
He's in the
Angelo.
boys' locker room.
Angelo, that was a really good question, because as traders, it almost puts us back into that Euro-Swiss cross back in 2015, and with a few other things with the European bonds. There's only so far the Nikkei can break, because the Japanese have told us that, and now that they own so much of it, and Kuroda, if you listen to him, said they only buy when the market's down. He's not chasing this. Doesn't have to. But the more you aggregate into a non-tradable position, of course, the less stock there is. So on a purely supply-demand basis, you know what, Judd? This ought to run. But again, the markets have become so coordinated. But I would say this: if there was a large sell-off of all the equity markets because of some unwinding, that at some point, if you got, like the other night when we saw that big sell-off and the Japanese market was down, what night was that? Because I was looking at it just for that reason. Let's see, what night was that? Oh, yeah, I knew it was the 21st. Last Thursday, I'm watching it and I'm going, they're killing it. Oh, because it was news out of China, of course, and they had it down 4 or 5 handle more, and then it ticked right back up. I said, if there was anything to buy, if you were looking to do a relative value trade, sell the U.S. because it's only going to go down so far. Now, of course, now that I say that, they'll say, oh, we're done. But they're not done, because now they've got themselves in so deep. Again, what's your exit strategy? How do you exit this? Because if the market were to get wind, it's like with the same thing. Once the U.S. started shrinking its balance sheet, the market kind of has a sense, well, you're going to be selling. I don't know where you're going to be selling, but you removed a willing buyer from the market. And not only is the Fed no longer a willing buyer, they're a seller. So, I can get a little more aggressive, which we saw the last quarter of 2018. Things to pay attention to. These are little tips into the market. They give you a sense of what the potential to any, especially a relative value trade. And these banks are just such a powerful part of the entire game now, that you can't necessarily trade off of them, but you can set up a way to, if you're looking for relative value trades, to say, hey, I could buy this and I could sell that. Do I think the equity markets are coming to an end? Well, you know what? The Nikkei has underperformed for 25 years relative to everything else, maybe a little more. So, it can outperform. Yes, it's the same way I feel about the German market. And you see it. You see little snippets of it. And I'm telling you, Lagarde, every day now, we're going to hear from her. She was out yapping today. And I don't mean to say yapping, because that's I'm not being critical. What did she say? ECB said, Lagarde says, it's now our duty to nurture and sustain trust, whatever the hell that means. But this is now, if you're not paying attention to the politics, you're going to get blindsided here.
Yeah, and there's a couple of things here. Like, I just put up the S&Ps and EWG in a monthly, okay? Last month they had ORH months. This month they held and they're taking off. They're going to close on their highs of the month. The targets are out there. They're going to go, the S&Ps, if nothing, go to those targets. So you got another 30 handles in the S&Ps. You get that today, you can get it Friday.
No.
You can get it Monday.
Yes, it's a really good point. And you know what? It's interesting here because things are starting to set up. It's like the copper hasn't broken out yet, but the copper's being pushed. And I don't know if yesterday we talked about Mexico, and then late yesterday afternoon, Mexico comes out with an announcement about a $45 billion infrastructure program over the next 3 years. So, you know, if you see more and more government infrastructure spending, that's the fiscal stimulus we're talking about. We ought, and I stress the word ought, to see the industrial metals outperform. If there's any substance to it.
That's a great segue into what's been on my mind.
Okay.
So,
all right, and that's the last thing we're going to entertain because I'm going to go work out.
All right. Well, then I'll save this velocity of money.
No, let's have at it.
You want to hear it? All right.
Yep.
So, you know, we're talking exit strategy, fiscal stimulus. So, you know, what's the big unwind, right? They've got to get, it's not going to happen until the velocity of money multiplier really starts to kick in gear, all right, and give us some inflation. So, you know, what would cause inflation? Well, so far, you know, we've had all of this monetary stimulus, but anytime there's monetary stimulus and then a little bit of fiscal stimulus, let's call it the Trump tax cuts, okay? What did we get? We started getting rate increases by the Fed. So it's been this push and pull. They've never been fiscal and monetary on the same page. They've always been opposite each other. So maybe something that we should be looking for is when the time finally does come where monetary and fiscal is on the same page at the same time, right?
Yeah, absolutely. Absolutely.
Okay.
This is the work of
that could be the paradigm shift, you know, that you know starts to cause the inflation that everyone's been worried about as a result of money printing the last 10 years. But then, right, that would screw up the Fed's or the central bank's inflation targets. Then, you know what the $1 million question is at that point, I think? Will the central banks be able to raise rates or sterilize all of that cash?
Without breaking the market, I don't think so.
Well, you know what? That's the work, believe it or not, of Olivier Blanchard, who's now, I think he's at the Peterson Institute. And, you know, because there's, you know, what they deem the multiplier effects of fiscal stimulus versus monetary stimulus. Yes, you know, and that's what they're striving for in Europe. You know, don't forget that's Lagarde's. She's got a dual agenda: create the European bond, the Euro bond, which is mandatory, coupled with a massive, you know, convincing them that they need a European-wide massive fiscal stimulus program. Who wrote that piece? There was a piece out this morning. Where was it? Hold on. I'm going to definitely find it because I wrote a response to this too because they were talking about how the Fed got it so wrong because they don't take into account what Santelli and I have talked about for 6 years. This is what the article was about. Let's see if I can find it. I didn't bookmark it. I just wrote a response to it. Because they don't take into account the effect of the global supply situation. And that's just not productive supply, that's also labor. Where was that article? Somebody wrote it. And this is exactly why they've missed the boat. It was very critical of the Fed. Here it's on Alhambra Partners. Anybody read that? That's
they have good stuff.
Okay, so he's got one out this morning. Jeffrey Snyder, the big one, the smoking gun. Okay, and this is exactly what you're talking. He's got it full of charts and there's a lot in here because they do pretty sophisticated things. So I read it, and it's a well done piece. And I actually responded to him. I'm on it now. So I knew it was. Where did it go? I wrote something to him, but because somebody criticized him for that the Gettysburg Address, it was much shorter and contained a lot more, it was, so why'd you write so long? I thought that was kind of rude. But it's exactly dealing with what, with why they've missed the boat so badly on inflation.
Yeah. Well, in the past, Ira, when I've spoken to you about deflationary forces, right?
Yep.
I was, to be more specific about it, I was referring to I'll call them the global deflationary forces of excess capacity and labor, right? Versus domestic inflation of college tuition, healthcare, et cetera, et cetera. There's different types of inflation. I'm going to call it domestic and global.
He wrote this piece for you. This is it, and really takes the Fed to task because, again, and it's always been my criticism of the Fed, and nobody wants to hear it, but that's my Nehru versus Nehru, and that's what I wrote to him in response because it's pretty self-evident to see that as long as global capital, we've discussed it in this room, can float freely, it's going, and now you have such great advances in transportation that you can ship goods, so you're able to take advantage of quality labor at a lower price all over the world. Well, that's a pretty good thing, and that's what it avails itself of. So then to measure, and the Phillips curve, don't forget, it's only, and Alhambra really does a nice job of taking that apart today. It's only a domestic based model, but if you're living in a global world, cheap labor, why did all these companies move to China? That wasn't only for the billion market, it was producer. The first leg of it was production, and they were taking advantage of a very disciplined, highly intelligent workforce at a ridiculously low wages, which couples with our conversation yesterday about Mexico. Mexico is sitting in that situation. It's just that they can't get. AMLO needs to kick them all in the ass and look them and stare them down and go, look we either get this right or we'll always be a third-rate nation and never get out of our own way. And that's what they need, a good kick. And you know what? The people need to turn on the cartels and go, you know what? We've had enough of you. You're holding us back. We'll never build the middle class based on drugs and illicit businesses. We need to elevate ourselves, and that's the key for Mexico. It's the key. It's everything.
Yeah, no question. But to take this fiscal and monetary coordination one step further, let's just say Lagarde is able to pull it off in Europe, right?
Okay.
And let's say the U.S. and other areas aren't able to coordinate with Europe, right, and get it all in global alignment at the same time. That would tell me, though, that in order for Europe to actually benefit from it and to get somewhere, Europe would have to become more consumption-based, right, or maybe more specifically Germany, a bit more consumption-based versus export-oriented, because if they're stimulating and we aren't, who the hell are they going to sell their stuff to? Who are they going to export to? China, at the moment, and I don't know how much longer it's going to continue.
I like that.
Right? But China's not recovering anytime soon.
No, but don't forget, and this is the bad part about everybody's numbers about China. You have, let's say it's 5.5% growth, but it's 5.5% of a $7 trillion economy. When China was growing at 12, 13, 14%, I go back to 2003 when I did a roundtable with Gartman and a guy from Citibank at the CME. It was really a good roundtable, and we talked about it. And I think the Chinese GDP was 700 or 800 billion then. So 5.5% of a $7 trillion economy is an awfully big number.
Yeah. I mean, but that would be perfectly fine, Ira, if if it was a static 5.5%, but what's happening is it's drifting.
Buy shit, okay, and that's what it comes down to. And there's more of them than there are of us.
Yeah.
Well,
yeah.
What was it? Deng Xiaoping said China's gonna grow old before they grow rich.
Doesn't matter. I mean,
he was speaking about their demographics.
Right, which is with the one child, that they're starting to change that too. But they have developed a serious middle class. I mean, there's enough wealth there now. A lot of it is concentrated, but there is wealth where, people are living a middle class lifestyle, not like in the U.S., but that's not an Asian lifestyle, by the way. You go to Japan, they have the greatest technological, people walk around with technological toys because, again, they don't spend money on housing the way we do. That doesn't mean that housing's cheap, but how much shit can you put in a 1,200 square foot apartment? Well, you know what? But I'm speaking seriously.
Yeah.
So what we spend fortunes on, they don't. So you see them. That's why they buy designer labels. They buy the best of everything because they go upscale. They go for quality rather than quantity. Americans, all you do is have to go look at any neighborhood on a garbage day and watch what people are throwing out. And you look in their garages. Yeah, I'm guilty. It's like my wife and I, as we get older and we're downsizing, you go, what were we thinking about? They don't have the space for that. So they find other ways to consume to consume. And it's more qualitative because they just don't have the room for quantitative. So it's interesting.
So the $1 million question is, do all the stars line up, Ira, in order to get somewhere with all of this stuff? And that's the $1 million question. Can there be fiscal and monetary coordination and, all of the right sorts of things happening at the right time? And I don't have confidence that that'll ever happen.
Well, you should stop thinking about that, Angelo, and just look at the technical setups we've got. By next week, we're going to have a big midweek shuffle at major targets.
Without a doubt. Without a doubt.
And then you're going to see whether, we get some sort of a back and fill or we don't.
But that's right. So you got to look at it. Angelo, you're looking at it as an investor. And we may well be right, and everything will be right. And it may be a year, 2 years, 3 years. Again, you have to tell yourself that because markets are irrational right now, but they've been paid to be irrational. Because go ahead and fade it. Again, the Widowmaker, go ahead and fade it. You know what the underlying fundamentals are. I know what they are. And people say, well, how do you know? I know what they are because anybody who has studied economic history knows what they are and they know what the end of it is, but I can't tell you what it is. So it's already gone on far longer than I could conceive whatsoever. And then they go, well, then you're stupid. No, I'm not, because I'm trading it and I can still make money while I'm waiting for these things to evolve.
Yeah. No, I agree with you. Don't get me wrong. I don't sit here and preposition for shit that could happen 10 years out.
Right.
This is just 30,000 foot view stuff, and I wait for market signals to tell me what's coming next.
Right, which is exactly the way you have to do it. Yeah. I know what the view is from 30,000 feet, but unfortunately, I have to eat at sea level.
Right.
Yeah.
My inbox is full every day of people either shorting, the market's too high, it's going down, it's a high in Apple, it's a high in this, it's a high on the other side. It's the most ridiculous stuff I've ever seen. Oh, I don't understand why my system doesn't work. We're going straight up. Because your system's shit and you don't understand how markets move.
I get the same stuff.
That's exactly the case. And you know what? And that's why if you guys do your job and I'm doing my work right, people should be able to trade within it. And when the big turn comes, people say they don't blow a horn. They sure do blow a horn.
Oh,
but
yeah.
you have to be prepared to listen. Now, they just haven't blown a horn, and they've given you a lot of false positives or negatives, so to speak. So you think that it is, but the ability, the mass of liquidity that's around the globe keeps it going. Okay, I was at the doctor this morning, and the guy is a great guy. He's just a great guy, and he's a bright guy. He knows a lot about the world. This is the guy who was going to introduce me to Sidney Rittenberg, who died this summer, who's 96 years old, and was in China for 33 years, and was actually in prison for 12 years in a Chinese prison. Very knowledgeable, and we were talking about it this morning, and he said to me, he says, I just don't know what to do with my money. He says, I see what's out there. I said, Doc, you're no different, but at least you're cognizant. He says, yeah, I see all these things that scare the hell out of me. I said, you're right to be afraid, but you can't trade to it. He says, well, that's the way I feel. I said, well, that's the way you ought to feel, because you can't trade to it, but you can start to position yourself for it, because you will start to see cracks. But right now you can't see them, and I explained to him about Minsky. You know, this is what Hyman Minsky had warned about. When things are good for whatever reasons, you get complacent and you do stupid things. And stupid things result in tumultuous economic outcomes. That's just the way the world works, as long as it's a capitalist system. When it's not a capitalist system, the authorities can hold things at bay far longer, which is why the central banks, by breaking the signaling mechanism of interest rates, are moving us away from a capitalist system. But what will be the cost to it? I think it'll be great. When? Don't know. I don't know. And if I could, and unlike, you know, the talking heads who come out on TV and tell you with such great certainty, no. And you know what? Yes, the market keeps going up. And that's as Gartman famously quotes, what's his name, the newspaper reporter, you may not always want to bet on the fastest and the strongest, but that's certainly what favors, those are the favorable odds, because every once in a while a long shot will come in. But you're not buying lottery tickets. You're not betting on long shots. That's not the way that you trade. You bet on on what is the continual run, and the continual run says that as long as the world is being flooded with liquidity, and it is, and they've shown you that when there are ripples to that the banks come in. What's wrong? You didn't see it with the Fed, with the repo market, how they panicked? They panicked because all of a sudden the liquidity was getting sucked out of the system for reasons they didn't understand, and it was causing some havoc. We're going to give you all the liquidity you want. And then you couple that with Mario Draghi. And of course we have the Japanese. Yep. And if things aren't good one day, we still have a lot of room to do, more QQE. So it's tough for markets to overcome that. Hell, bombing Saudi oil installations becomes secondary. And let's face it, the tariff issue is truly a secondary issue. The only reason that equity analysts place so much credence on it is because they think it's holding back capital expenditure, capital investment, right? That is the only reasons right now that tariffs matter. Because corporations are nervous that if more tariffs go on, world trade will slow down. World trade slows down. Why do I have all? Then there'll be way too much capacity, so they're holding back from investment. Well, they better hope they're right. I think that they hold back. That may be a small reason, but I think capital expenditure has been low because as interest rates are kept artificially low, we borrow too much from the future, and that's what businesses are really worried about. But it's just a theory, it's just a hypothesis. As much as they view their hypothesis. Hello? Shit. Oh, hello?
Yeah,
Hello?
we're here.
Oh, okay. Okay.
Yeah.
I thought, so, I mean, that's the dilemma that we sit on. That's why tariffs matter. Otherwise, they're not affecting the consumer, so to speak, because they ran a poll this morning, and over 55% or so of companies weren't passing on the increases, and the numbers relative to the size of the U.S. economy are not that great. What the equity market cares about, they want them gone because they want to see if you're going to get an upthrust in capital expenditure. That's the real measure for the equity markets.
Global excess capacity. Yeah, it's been going on for a long time, right, Zyra? And zombie companies that are staying in business because of zero rates.
Listen, that was what China brought to the world, was excess capacity, because they were spending massive amounts on capital expenditure. They couldn't build a factory fast enough. Build another one, build another one, build another one, build another one. And eventually the world gets awash in supply, which is why the Phillips curve just doesn't work anymore, because the world is so much more global than when the Phillips curve really gained its legs in the 70s. And it was a whole different world. You also had labor unions, private sector labor unions with great economic power, meaning that they could get raises by going on strike. Different world in which we live in. And the model doesn't take it into account. And I know, there'll be 5 guys who will show up on my doorstep telling me why my rationale is wrong, and trying to convince me with some sophisticated maths and new additions to their models as to why the Phillips curve still is relevant. They'll talk about its flatness. Okay, I say you're wrong, because global capital is just too powerful, and it has overwhelmed the relevance. That's my theory.
I agree with you 100%. Ira, you and I know damn well that if demand was there, tariffs or no tariffs, companies would invest in plant and equipment somewhere.
Exactly. Well, if they were, they have come to realize, and this is a big theory of Schumpeter and others of the Austrian school, that when you keep expanding capacity, which is the role of the entrepreneur, you eventually get to where you have excess capacity, nobody can make a profit, and they start to shut down and lay off workers. I mean, that's what boom and bust cycles are about. That's what the economic cycle of the capitalist system, whether you're 2-year, 5-year, or 20-year cycles, or if you want to go big with resources and go to contribute on a 60-year cycle, that's what they're about, because that's the way the capitalist system works. That's why when everybody loves to quote Schumpeter and creative destruction, that's what creative destruction is. Everybody, listen, I build iPhones. I'm the only one building them. My profit margins are 45%. Now somebody else, Samsung, comes along and they can do it, and so they lower prices, and now my margins are only 25%. And then somebody else enters it until there's only 3 or 4% margins, maybe less. That's the way it works. And then those who are late close their businesses down. Workers get unemployed. Unemployed workers don't have money to buy anything, and it becomes cyclical. It's a feedback loop, and that's what works. So, what does Buffett always try to do? He tries to buy businesses with moats, whose profits can't be attacked like that. Right? It's the essence of it. What did Teddy Roosevelt try to do? Teddy Roosevelt broke up the trusts because they had monopoly power. And by breaking them up, he dispersed economic activity because now people could compete with them. And you get boom and bust cycles. It's the nature of capitalism.
Ira, 2 last points, and then I'm going to shut up.
There you go.
The first one is, in case you're interested, Simon Potter was on Real Vision yesterday. It was a conversation about it was a conversation about cryptocurrencies. But, you know, some central banker speak did ooze out of it, and I didn't have the tolerance or the patience to listen to the whole thing. You might, I don't know, so I'm just mentioning it. And going back to your point about cracks will show up somewhere, would you say that, you know, where would you look for cracks first? Currency markets, high yield spreads blowing out? Like, where would be the different places that you'd be looking for the early, you know, canary in the coal mine, early warning signs?
I don't know, because all of the above could happen. It won't have, the currencies will not be a lead factor unless people are running from the dollar. And I just don't see that. Some people who I respect think the debt market, because of the huge amount of corporate debt that is now rated BBB and could easily in a downturn, because again, if you're borrowing money and you're able to, you know, with ease pay back that debt, fine. But when things, you know, again, when you start closing plants and the debt, you see, that's the problem with debt. It never goes away unless it's restructured or defaulted on, or, you know, as governments will do, inflate it away. But debt doesn't disappear. And whether or not you can make a profit makes no difference until you can't pay your creditors, and then all of a sudden they start moving against you and your assets. So, yeah, I don't know.
I'll give you a more simplistic idea right now.
Okay.
Look at the SPOO bonds at 199.42 on a monthly. That's going to tell you everything you need to know. And
which one?
The SPOO bonds on a monthly.
Oh, yeah.
199.42.
Yeah.
Okay.
Yeah.
So that's where it fell apart from in 2018. You know, it fell apart in 2019, and the spreads are still massively lagging this index rally. So if you're going to get
yeah, that's a good point.
You're going to get a signal off of that. When it gets up there, it's going to reject for sure. The question is how much.
That's a very good point, and you know how powerful this chart has been on a predictive basis. Listen, I make no apologies. We caught the rally in 2017 in October, and we caught the break exactly a year later off of this chart, as far as I'm concerned.
Oh yeah, here was the rally, and that was that deal at Top Step Trader when it broke out that first week in October, and
right.
And you know, and then you saw the September October break when your daughter was getting married and you're ready to jump up.
Yeah. Well, yeah, but last October when it got up, it had a 30% straight up run from October 17 to October 18. 30% in this. That was massive, and that's what we had talked about. But the October 17, the 1st of October, it was actually September 30th, it closed above that all-time high it had made going back to December of 1999. That was the critical. That top had held, that high had held for 18 years.
Yep.
And all of a sudden, and it ran like a banshee. It ran like a banshee. So, I mean, these are
65 S&P points.
That was a massive run. And the bonds went the other way.
Yeah.
So, I mean, this is really a good chart, so I'm glad you brought that up. But it's things so where will the cracks show? Yeah, stay tuned, because we will see them. They're just out there. And again, easy money. But we know that if Europe were to go back again, and if Europe started contracting its balance sheet, of course it won't. Or I shouldn't say that, because you might have to get a contracted balance sheet in order to get the fiscal stimulus that Lagarde wants. So think about that. Because the Germans are really pissed right now. We talked about that yesterday with German real estate prices. They're questioning whether it's in a bubble. these are dangerous things. Now, yeah, again, we fall prey to what we see in the media, because especially when the media has the backdrop of a picture, it just doesn't picture well. But these are the underlying things that are simmering that will cause the fissures in the global system. And there are actors out there, meaning Russia with Putin and Xi with China. And, it's not like they don't have ways to push back when they perceive that they're being bullied. They do have ways to push back. Everybody hates the ability of the U.S. to sanction. So where will they come? When will they come? Don't know. I really thought they'd be here already. But the power of this the vast amount of liquidity flowing around the globe has the ability to sustain itself far longer and greater than I ever imagined. But that's the way it works. I'm not locking up with it. I'm not. You don't get angry. Who cares? Who cares? There's too many people who want to be right.
Yeah, trade to make money, guys. That's the game.
Exactly. You know what? It's nice conversation at a cocktail party. I learned that when I managed hedge funds. Most of the investors only want to be there so they can sit and talk to you and have enough conversation for the cocktail party. I'm not interested in that. I'd rather be drinking better vodka because I could afford it.
All right. Well, thanks, Ira. It was great.
We're covering a lot of theoretical ground here, only because the markets are in this push-pull dynamic, and the equity markets are heading up. But again, let's watch to see what happens when we finally get some type of trade agreement, because that will be very interesting. And will the United States prove to have played out? Because it's way ahead of itself. Again, third quarter profits were not great enough to power what we figure yesterday's rally was. We've had a 14% rally over the last period, off the low made when they were fearful that the tariffs were going to be ramped up dramatically. So even with the to and fro of the tweeted world, we're up 14%. Profits have not been driven. So let's see what happens when you get, quote unquote, phase one. I think that's going to be a very important 24-hour to 48-hour period. But what should happen, in my mind, what should happen is that the European equities, again, ought. And I stress the ought. I'm not saying, just in my mind, should outperform, because they've been, even though the DAX has had a pretty good rally, it's still not. And again, if you look at EWG versus the DAX and you see how that has lagged, a lot of that is because there's still concerns about tariffs. So let's see what happens when we finally get something. Maybe Donald will have something to say before Thanksgiving starts.
Ira, there's a EWGS, which is the German small caps, FYI.
Oh, okay, I should probably watch that, right?
Compare the two.
Okay, hold on one second.
Wait a second.
Wait, I'm not even getting it. Why am I not getting it? EWGS?
Yes.
We're not
Is that listed?
No, it's not listed, Angelo.
Okay.
Yeah, it is. I'm pulling it up. I've been looking at it for years.
Well,
on CQG?
We can't pull it up.
I can't get it.
EWGS. That's the German small cap.
I am not getting it. I'll have to find out why. Wait, hold on one second. I know where.
Yeah, EWG is trading at 29.10, and EWGS is trading at 56.97.
Yeah, I have to see. Yeah, because, but I don't care what price it's at. Where is it relative to its all-time high, EWGS?
Oh, well, that's
the important question.
That's pretty damn simple. I put up a 2-year chart. It is trading. Let's see, 12. It is trading roughly 21% below its January 18 all-time high.
Okay, so January 18, that was the wedding, Judd. The January when we saw the stocks head lower. So let's see, January 18. That was when I was, yep. But EWG has the exact same chart.
Yeah, EWG is not much better. They're basically the same.
The high was made January 24th. My daughter was married, I think January 23rd or 25th. Let's see. I can tell 25th. No, I take that back. She was married the 28th. So so the high was made too in EWG, like on what's the date? January 24th. So we're basically about the same percentage below.
And last month you had a monthly bottoming pattern, and it's following through higher this month.
Yeah.
The question is what it does next month or the month after.
Well, you know what? Because it's now in sync, and as you roll the tariff trade, but it's one of those places that if you were looking for a value trade, and it has a pretty nice dividend on top of it, if you were looking for something that could outperform, listen, the same way that we looked at KSU, in the same way we looked at a few other ones that really did well in outperforming from certain levels, because they were slow getting there, but once they got there, they were under-owned, and then people, got fairly dynamic in chasing them. I mean, but you look at Deutsche Bank is still languishing on the bottom. You want to see the impact of negative rates, you look at the European financial sector. Now, can you buy that? I don't think so, because you'd have to tell me how they're going to get out from under it. If they rolled back negative rates, and they did it in conjunction, this goes back to the original question today. If they rolled back negative rates in Europe by the ECB, but they did it in coordination with a massive fiscal stimulus program, the first response would be probably that they'd sell off the market because of the rise in interest rates. But I'm telling you, that's about as good as you could get it. You could get it. You would, fiscal stimulus is much better. If it's true, if it's really a good program, is far more powerful. That's tax cuts and infrastructure spending, far more powerful than monetary policy will be, especially coming off of these levels. A drop from 15% to 5% in monetary policy is a really wonderful thing for an economy if it's done for the right reasons. But fiscal stimulus, and that's the work of Olivier Blanchard with the multiplier effect on fiscal stimulus, if it's done right, it will have a dynamic impact. And then I promise you I will be long Europe and short the U.S.
And here's this European bank stocks thing. It's just going sideways.
It's terrible. They can't make money. And banks in Europe are far more important to the economic system than they are in the U.S. Because the corporate bond market in Europe is just not as big and vast and as well developed because the banks kept it that way. The banks were the intermediaries and still are the intermediaries for the entire system. They do so much of the lending.
I heard a quote, Gary Schilling, fiscal projects, whereby they make the shovels in China.
Well, they got to be made somewhere. Don't forget, Levi Strauss. He didn't dig for gold. He sold them the equipment.
No, I don't think the U.S. could make the shovels, even if we wanted to. I don't know if we have the productive capacity to do it.
Well, here's the thing, though. And as wage rates go up in China, that's why people can bring factories back home, because the supply chains can shift. So where are they shifting to the next level? They're shifting to Vietnam, Thailand. They're not just moving there because of tariffs. It's a wage cost, which is why Mexico needs to get its house in order. I I know the politics are difficult. I know because the corruption is so vast. But that's why they're sitting at a precipice and they need some real leadership. And I thought AMLO, coming from where he comes from, his political background, because if you come from the left and you can prevent the left from rising against because you're one of their own, and you could speak with a market, they need to be done. Mexico needs Deng Xiaoping. I don't care whether it's a white cat or a black cat, as long as it chases mice.
Or catches mice.
Yeah,
That's a great quote.
Mice. It is, yeah, as long as it catches mice. I don't care what it is. That's what Mexico needs. But the corruption, really, I make light of it. But corruption has a price. Corruption has a price because somebody's paying it.
They all do. Everybody does. Can you imagine what Carlos Slim's corruption bill is? The vig he has to pay just to run his businesses and be left alone?
Oh, no question about it.
I mean,
no
they all
question
do.
about it. It's like the oligarchs in Russia.
Yeah.
The oligarchs and the type, it holds back. We know that Russians are certainly capable capitalists because wherever they go, they're certainly some of the most adept software designers, right? Every fucking Wall Street firm, excuse my language, they're all Russian programmers. So it's not for a lack. Go to Israel, who's at the forefront of technology, and so many of these are Russian engineers, who emigrated. So it's not that, and nobody teaches math and science like the Russians. Go to New York and look around at all these math academies. They're all founded by Russians who teach math, advanced math in a Russian way. So corruption, it just chokes the system.
Yeah, well, everybody has to pay the vig to Putin, so.
That's right. That's right.
I mean, look what Khodorkovsky, talk about some dumb Jew. I mean, here's a guy, he was just basically told. Yeah. And he said, no, I'm bigger than you, and 10 billion later, and how many years in jail? Stupid.
Right. Well, and what they didn't understand, and I mean this, because this was a discussion in real time I have with many people, is that Putin had to go grab, don't forget, these guys all seized the assets, because they were working in management positions at these firms when the Soviet Union fell apart. And they basically bought all this stock, quote unquote, and wound up holding these companies, these giant steel plants, these mining facilities. And Putin needed to come back and claw back some of that money so he could buy off the pensioners in Russia. Because the pensioners got screwed. They didn't have the education and they didn't have the fortitude to be able to deal in this new economy. And the pension programs were too weak. So he had to go back and claw back some of that money. And Khodorkovsky, no, I'm not giving you back this money. Go to other sources. And you know what? Putin said, listen, Putin in many ways is a thug, but he knew what he had to do, which was to build up the pensions so he could pay the pensioners and stop them from coming out in the streets and demonstrating all the time. Because you weren't going to send out police to beat up 60-year-olds. It's just not a good way to run a country. So he needed to claw back that money. And you know what? Khodorkovsky made a determined decision. No, I'm going to run against you. No, you're not. Let me explain to you the way it really works. And that's what happened.
Yeah. I mean, you guys got a jet. I would have kept on flying.
Except that all his assets were there. You know what? They were so in love with themselves. And he had natural resource assets. So where are you going?
Oh, yeah.
And they thought that they could beat him back, because they were used to Yeltsin. And they figured this was the same thing. No. Slow that down. They say, you're not dealing with Yeltsin here. And they paid a price. You know what? And what's his name? I'm sorry. The American lawyer who is, they love to roll him out. You know what? He also stole a lot. There's nobody there who didn't have their hands in the till. What's his name? The investment banker starts with a B.
I know who you are.
Yeah, they're like, you know what? Stop crying. You went there to steal like everybody else.
My brother, Ira.
Huh?
I mean, my brother represented all those guys when he was with Crude Air Brothers.
Yeah, well.
He hated them. He hated all of them. He was over there for a hostile takeover. And I mean hostile over there. Armies in front of an aluminum factory. Armies. 2 armies.
Yep.
Who's going to win? That was the game.
Yeah, exactly.
And we're coming in and taking your stuff.
You know what? And Putin was nobody to fool with. Actually, I just read a really good piece that what's her name wrote in 2016. I think Fiona Hill on Putin's on Putin. It's really worth reading. It was written in the. First of all, I got to go get this guy's name because I never liked this guy. And it's not to say that he wasn't done wrong. Yeah. But he was on the wrong side. Let's see. I'm getting old.
He was the head.
I know. Broder. B-R-A-W-D. Yeah, Broder. But you go back and you look at these guys, and you know what? They all had their hands in the till. There was so much. It was called a kleptocracy for reasons. But it was in the I think what's that called? The Journal of Atomic Scientists. That she wrote the article. Let's see if that's one. No, but it's really a good article on Putin. Very good article. And then a friend of mine this morning was just, it's now official. He has been nominated for the Presidential Medal of Freedom for his work. He's 97 years old. He was just turned 97 last week. Huh. Wow. Unbelievable.
Ira, you mentioned Rittenhouse before. When he died, there was a big obit in the Wall Street Journal. I don't know if you saw it.
Rittenberg. Yeah, I did.
Rittenberg.
Yeah.
Yeah. Did you see the big obit that was in the Wall Street Journal for him at the time?
I did. Yep. He's an amazing. I'm so sorry I didn't get to meet him. It's all I can say. I'm really pissed I dragged my feet because my doctor was setting it up, because that's the guy. My doctor is the guy who did an hour and 22-minute YouTube interview with him. It's great, absolutely great. So it's where it lies. But you know, again, there's so many things in play that we'll see it. But you can't, again, trade by what you can trade and see, and the rest will take care of itself, and we'll be ready for it. Just like you can prepare yourself. I just don't ever believe that they don't blow a whistle. And the whistle may be a technical indicator that you get that, hey, Judd, how about all-time highs on a single-day island?
Yeah, that'd do it.
Right?
Oh, yeah.
Oh, yeah. Yeah. There's always, they say they don't, yes, they do. You just have to be prepared for it. You have to have done the work to be ready for it. I'm not complacent. I never will be complacent, because complacency in trading is a disease. Now you can say, well, that's how trends run. Okay, it is how. If I would just sit back, it's why I'm not a fan of certain types of trading strategies. I will not. I just won't lend myself, because I always think that I can do the work and come out and find what's my edge? Nuance and context. That's all. So
yeah, plus the fact,
I cannot be complacent.
You've got us watching all these relationship spreads, and they're going to confirm the technicals. They're going to show us. They're going to tell us as it's happening if it's real.
That's exactly right, Judd. That's right. That's the key. That's the key.
Ira, next time you come in, We should have a conversation about how the U.S. has political risk and how we'll probably see a shitload of volatility from the primaries through November.
Exactly. Now, some of it is being rolled back because Lizzie Warren is falling dramatically in the polls. I don't know if you're aware of that. She's dropped 14 points in the latest polling. So her being at the top was going to be, I think, a seismic event if she could have sustained it. Now, no. That's going to remove one of the potential landmines for volatility.
Yeah. Well, we can chat about it next time.
This is Robert Siegel. Loved your comments yesterday about the farming with Rob too. Confirmation of this today was John Deere. While they beat the latest quarter by 2 pennies, they pre-announced 2020 sales to be 5 to 10% lower globally. Stock is $9 down, but that's a first canary in the coal mine, showing the decreasing income of farmers.
Robert, you're in Kansas City, right?
Yes, Wichita, Kansas.
Wichita. You know what? I should have stopped to see you on my way, but I came through Tulsa this time. Last year I stayed in Wichita overnight.
Let me know next time. I'd love to have you over.
And I know you're doing research there, right? Who do you work for?
I work
German?
for a John Deere competitor, AGCO Corp.
Yes, that's right. I remember that. That's right. So wow, yeah, you're dealing with the heart of it. You're the picks and shovels, so you really know what's going on, because you can't hide it. And farmers are struggling. And I'll tell you what, Deere is getting as much as they're going to get out of the construction business as is Caterpillar. Because everywhere you turn. But I think the WeWork, and we'll mark that down, because I think WeWork can be a real problem for the market, by the way, because they created, they've got an enormous amount of leases, and leases are liabilities, as my real estate friends always remind me, and these are not cheap leases. So they're saddled with an enormous amount of liabilities, and it's also prompted a massive amount of building because they took up so much space. So the banks were really willing to lend for all these developers to build more because WeWork had this stuff locked up. Let's see what happens.
Yeah, it'll be interesting.
All right. Happy Thanksgiving, guys. This is a great format, and we're going to really ramp up the questioning end, because I think that's how I'm going to start writing the blog. And people can give me, I'll take advice, because I'm going to start writing a blog generated by questions, because it gets old. I can just write what I want to write, but it gets stale. It becomes a tale of tales, as I say. Not sure. Which tale we're grabbing and which tale are we listening to? So I'm going to, I think, rev it up by making it centered on questions that come in and then writing directly to those. I think it'll become much more purposeful. Because I'm going on the 10-year anniversary, by the way. I've been back reading old ones that still have great relevance, because you can go back in the archives. My first blog was 12/17/09.
Your first blog was in 94 or 95 when you were sitting in the office and you started writing.
You're right. But we didn't have the internet to save them, Judd. Those are all gone. But yeah, you're right. That's right. And it was Notes from the Underground then. And then I stopped because, you know what, I was either going to compete with Gartman, and Dennis and I had talked about it. And I was still so actively trading and involved with some other things that I couldn't sustain it. Yeah, you're right. It's exactly what, 94, 95. So, so I'm looking to reformat. I mean, 10 years is a long time of doing this, but this room gets me really motivated because it makes me think about things. So thanks, and happy Thanksgiving to everybody. It's still an amazingly great country, and we got a lot to be thankful for every day. The fact that we can sit here and talk about these things and nobody bothers us, so absolutely wonderful thing. All right, be well.
Yeah, thanks. It's a great.
Okay, all right, take care. All right, thanks, guys. All right, thanks, Robert, for that great comment. I appreciate it. Keep us posted.
Happy Thanksgiving.
All right. Thank you. You too. Enjoy. Bye-bye.
Bye.
All right, so let me just stop that.